Okay, question 3. So question 3, where's my pen? Where's it? Where is my pen? Okay, there we are. Yes, my pen is over there. Oops, okay. Let's come back here. Bring that up back. Okay, so question 3. Okay, here we are. So we have here, it tells us that this is really double entry. So it says this guy transfers 13,000 of their own money to a business bank account. As soon as you see that, you're thinking, yes, debit bank, credit capital. So they've given you a capital account to play with. So you're thinking, okay, straight away, debit bank, credit capital. So you've got 13,000 there. Then it says 1,100 was paid from this account for some furniture. That's from the bank account, right? So we know that we can only ever, you're not going to start taking 1,100 out of this capital account. So don't get waylaid by the trick. Maybe you have bank account, 13,000, and from here you would pay your furniture, 1100. But as far as your capital account is concerned, this is it, 13,000. And then there's some other information. So this question says just complete this account and do the balance carried down. So this is, again, I've always said this. This chapter, this unit is really a bolt-on to the first unit you did. So we have balance carried down, 13,000. And then if you like, do your thing over there, 13,000, and then you're brought down is 13,000. So that's your capital, 2 marks, right? Okay, there is some information. They carry on and then they say, okay, I'm going to go into the next page in a second. But they kind of they're going into this area of the accounts or the statement of financial position. It says you're working on the final accounts of another trader, Onyx, and then you have to prepare this on the 31st of March. They give you the final trial balance, which I'll show you in a second. That's over there. This whole thing down here. Oh, sorry. It's actually, I think it's better I come onto this page now. So here we are. You're working on this thing, the final trial balance, and they tell you that the profit of 42,495 has been recorded. So AAT are really good. We know question 3 is going to look like this. We know you're going to be preparing a statement of financial position. There are some questions in the exam kit. The exam 14 marks. The exam kit questions. Let's get all the 14 marks where you have to prepare a statement. Absolutely everything that goes into a statement of financial position. Right? We know this profit is going to go in the capital section. We know that, right? Anyway, they tell us Onyx has a policy of showing trade receivables net of any allowed doubtful debts. They tell you. So it says using this information, what would the value of trade receivables show in the financial statements? So what we need to do is we need to look in the financial statements, in the trial balance, and we need to look for trade receivables, which is a sales ledger control account. And then you can see there you have your sales ledger control account over here, 25660. That's your sales ledger control account. And you need to take away the allowance for doubtful debts. Remember, this allowance for doubtful debts is kind of this provision we make because we don't think we'll get this. We just don't think so, but it's a provision. Remember, I've talked about this from the first unit. In a way, it's sort of saying that we think we're going to lose this money, so we just make this provision. It changes from time to time, and that's the change, but it changes from time to time. But this is the key point. This is what we're taking away. They actually tell you to take away the allowance, so they give that to you. So what am I trying to do? I'm trying to do 25,660, 25,660 minus 1,200. That's what I need. That's what I'm trying to do here, right? That's the scenario here. So, and so 25,660 minus 1,200 gives you 24,400. Let's do that. And then they tell you to do this wonderful thing about preparing the statement of financial position. So, I mean, I'm just going to kind of just go through this list over here and then go to the answers because I don't think there's any need for me to literally do it just because of time. But this, again, you can see here, you need to know. We just need to know. I suggest you do this. Write this down. Accruals, in fact, write current Current liability. Sorry. Excuse me. Current liability, right? You need to know. We just need to know. This is an expense. This is an expense. This is going to come off my trade receivables, right? So I've dealt with that as well. This is an expense. This is an asset. This is an expense. So this is my revision of this by going through this, and we'll look at the answer. This is just capital, right? This is closing inventory, if you like, right? They tell us it's closing inventory. So this is an asset, right? But if I was preparing my income statement, this is where it comes. This is the asset. Remember the external trial balance, and this is where a statement of profit or loss, when I deduct it, remember opening inventory plus purchases minus closing inventory, that's why it's on that side, and that's the asset. That's an expense. Disposals of non-current assets. So you have some kind of gain on your disposal. So that would have come in as a gain in your income statement under your gain, as a gain on you selling off something. Drawings are drawings, right? This is in my capital section. This is the equipment, and this is the accumulated depreciation. So this thing will sit, if you look next to this thing. So you're going to have this. I'm just going to do the very first one. Non-current assets. You have equipment. That seems to be the only thing you have. Equipment, and you would have 32,800. The accumulated depreciation to get the net value. Yeah, that's how you deal with that. Opening inventory, you'd only need that if you're preparing the income statement. We're not. That's an expense. And that's a liability. They tell us it's a liability. Prepayment, that's an asset. That's your trade payables or your purchase ledger control account. That's an expense. That's revenue. That's I. That's an asset. That's sales returns. So that's kind of coming off I. That's kind of coming off this thing here. And VAT is a liability because it's a credit in this scenario. And we literally populate this thing. So, and then we have the capital section. So you have your opening capital, which is given to you in this question. Let's look at this. So whenever you look in your balance sheet, you see this capital figure, that's always it's given to you. And so your opening capital, you then add on the profit, which is given to you. And we have questions already in the exam kit that look exactly like this thing, right? We're doing right here. You're given your profit, add on your profit, so capital plus profit, and take off your drawings, right? And then you have your drawings given to you as well. Your drawings are given to you, and then you can take those off, and you can get your closing capital. So what I've done is I've also put in, I don't know if it's loaded, if it'll load in time, but I've put in the, if this will load. Yes, so here we are, yeah, and that's it over there. So that's kind of my final answer. This you must just know. You must just be so comfortable with how we prepare this thing. It's a given. It's a given. It's 14 marks, 15 marks to take home, so we must take it. Great. And so you can see everything that we have in there. These are all the liabilities. Please email me if you're not happy with any of those questions to do with that. Okay, great. Then I think the next question, let me just see. It says that, let me see, where are we? So we've done that, and then we've done this. Right, okay. What I will do is, let me quickly, I think whilst you're here with me, I can quickly, I thought I had loaded the next part of the question. I obviously haven't. Let me just load that bit right now so I can do that as well. Question 3, part 4. Very quickly, so I can do that in this video as well. I'm making another video. Yes, let me just load that question sheet. I actually thought that was the end of that question. Question 3, part. Question 3, part. I can see another. Question 3. Right, because in my in the answers they seem to have. Let me just go back here and see what question they have here. They seem to have another bit that they seem to not have done just yet. Right, so the last bit here is this question about drawings. Complete the following. Drawings, well, yes, drawings will be a debit, of course. in the capital account, won't it? If you like, right? Drawings, if you like, these are always a debit, aren't they? Drawings, always a debit, right? And the opening balance for the following, whenever you see this, this is saying, this is the closing balance for the 30th of March 2007, and so this becomes the opening balance of the next period. So that's, I was just looking for that little cutout bit. That's the answer there, right? So the closing balance of this period is the opening balance of the next period, and then we move on to task 4. So that's the end of that video. So that's question 3 done. Please email me if there are any issues, but there are exam kit questions on this, preparing the statement of them, and just be clear on what the non-current assets are, the current assets are, current liabilities are. Take that from that, get the net current assets, find your non-current liabilities, and then add this to your non-current assets and take away your non-current liabilities, and you should arrive at your net assets. And that, of course, is equal to opening capital plus profits minus drawings to give you closing capital, and those two. Okay, great stuff. See you in question 4.